Monday, everybody. Welcome to the TraderMerlin Show. It is your Monday afternoon. Stopped out today. It was a bad Monday for me. I was trading this morning and I forgot to move my... Well, I didn't forget. I was in the middle of things and didn't get to move my stop loss down. And something that had a nice little winner on whipped around, turned me into a loser, hit my original stop loss. Down 250 on the day. But you know what? It'll be good by Friday. I'm sure I'll be drinking whiskey again. Hope you all had a great weekend out there. Hello, Les and Greg, Sue. I heard sweltering in Boston this time of year. We're getting like Seattle weather down here in Southern California. Kind of a weird transition for us, but we'll take a little bit of cool stuff. Kevin, Big Eb, Simon, Thomasina, Jerry, and Tom as well. Good to see you guys all with us here today. Now, but the show topic for today, something that most of you are probably rather familiar with, which is dollar cost averaging. And the reason for this is I've received a couple of questions about it in the past, but I just haven't really gone over the topic. I decided to go into it because I received a phone call from a colleague today talking about an individual that had sent him some questions, and they're rather pointed questions, a lot of times almost like, jabbing a finger at the guy. And he said, how would you address this? And he read the question to me, and I was like blown away at the question itself. So I want to go into dollar cost averaging and how it pertains to current market situations. Now, for those that aren't familiar with it, it's okay. I guess I will start out by showing you this graphic here and asking you all a question, which is, how many of you think that dollar cost averaging is a great trading and investment strategy or tactic? If you think it is, say yes. If you think it isn't, say no. And if you don't know what it is, just say I don't know, and I will go a little bit deeper into the definition of it and how it works. But if you think dollar cost averaging is a great investment technique, type yes. If you think not, type no. If not, just let me know so I can go over it more. So, by the way, Lisa, thank you so much. I really enjoyed actually Friday's session. It's very rare that we get to have that many minds of traders in the room and just covering great topics. I really enjoyed that as well. All right, so while I wait for the 30-something second delay on YouTube to go through so I can see your answers, I got to start off by saying I think that dollar cost averaging can be a phenomenally powerful tool used correctly. We can't make a blanket statement about anything and say, this is amazing, period, right? There's always times where something's going to be great and something is going to be not so good. So for the podcasters out there, I'll read some of the responses. I've got negative, no, Batista says, if you know what you're doing, depends. Over a long period of time, it can work. Yes. Only average up, not down. Excellent, Nick. That's definitely, I agree with that one 100% there. Tom says, it's an okay tactic if you are ignoring the 401k and markets in general. Works fine if your trading is doing what you wanted it to do. So you're talking about going in your favor. So that would be adding to a winning position, kind of like Nick said there. So I'll cover the when and where to use it because to me it's critical. And the one question that really raised my eyebrow was a gentleman asking about it with stocks like GME and AMC, so GameStop and AMC theaters. I gotta say that if you're gonna use dollar cost averaging on GameStop and AMC, you should look at the mirror and type toe die on your forehead. So when you look at the toe die written backwards, you can see the word idiot on your forehead. Because that's ultimately what you'd be doing. You're purely gambling. Okay, I know, I sound like an ass. Let me go forward here and explain what I'm talking about. So, let's see. I actually have some things to go over. This is our list. If you have not put your name on this list and you'd like to be a part of it, let me know. I'm sticking with it, doing my push-ups and actually studying German because my bass just got the strings Saturday, so just getting that back up to speed. But glad to have everybody on this list. If you got something you want to add to your June challenge, let me know. Let's stick with it. Keep doing it every single day. Okay, so this is the question I received. This is probably like 2 months ago. I got this from Steve. He says, I'm a big supporter of dollar cost averaging. Where do you stand? As I just mentioned, I am a fan. I think used correctly, it is an extremely powerful tool, but it has to be the right situation. So for me, it boils down into two basic groupings. You have, first off, what's your objectives of DCA or dollar cost averaging? So if I go here, the first part is short term. If you're using dollar cost averaging in the short term, and when I say short term, I'm really meaning from a day trading perspective, oh my God, you are crazy. You are absolutely nuts for doing so. It's the biggest recipe, second or third biggest recipe for disaster that you can do when you're trading. It's so bad. You guys know I have this 10 laws that I go by, right? And this has been the result of decades of trading, right? I'm not some YouTube sensation that bought Dogecoin and tripled my money in 2 days and now thinks I'm a genius. I've blood, sweat, and tears went into this list. And if you put a number off to the side of each one of these rules I have on my list, I'm going to say that each one of these is at least $100,000 on losses. That means there's over $1 million worth of losses on this list from trading for 20 plus years. And there's 3 of them on here that I want to just mention to talk about the dollar cost average. So number 1, dollar cost average. Let me know if you think these sound like dollar cost averaging. Number 2 on my list here is, when in doubt, get out. Deal with reality. You entered the trade for a particular set of reason. If the trade goes against you, you were wrong. Admit it. Move on to the next trade. Flats are winners. Adding to a losing position is dollar cost averaging. And it basically, if you're wrong on a day trade, you just got to get out and move on, period. So step number 1 on my 10 laws here is actually rule number 2 is pretty much addressing dollar cost averaging. Number 4, don't add to losing positions. So you can see I've made this mistake many times. So it's actually on my list 3 times. I've got when in doubt, get out. I've got add to losing positions. And then number 7 on my list is have a daily loss limit. Not only daily, but also per trade stop loss and monthly stop losses. So 3 out of the 10 most costly things on my list there are related to dollar cost averaging, adding to losing positions, getting in over my head, and just being stupid about it. So if you're telling me that you want to use dollar cost averaging as a day trader, I would say you're an idiot. Do not do it. It is extremely dangerous, especially when you have 4-to-1 leverage intraday. It can not only make you wrong, it can make you extremely wrong. So you should never be doing dollar cost averaging as a day trader. Now, the real power of this is in a long-term perspective. Now, from a long-term perspective, what do you mean? We're talking buy and hold for a long period of time. Now, I saw a lot of comments coming through here, and I apologize if I can't read them all right now. It's kind of tough to read and talk at the same time and switch an entire show. From the long-term perspective, you're looking at months to years, right? Ideally, you're in a Warren Buffett type situation. You're going to hold these things forever. The benefit of time is that we can ride out a lot of those wiggles and fluctuations in price. And that's really the essence of this. It's knowing that if we go back to the fundamental mechanics of how markets are constructed, meaning the DNA of an index, like the NASDAQ, like the S&P, like the Russell, like the Dow, it's a basket of securities that gets modified over time, and they remove the bad stuff, they put in the hot stuff. So it's built to go up over time. Therefore, dollar cost averaging is great in the long term. That said, it depends on what you're buying. So, in the example I just gave, if your dollar cost averaging was something like the NASDAQ, the Dow, the Russell, and you time it accordingly, then it's great because Russell's not going to go to 0. NASDAQ's not going to 0. It could go pretty low, but over time it'll come back. Now, this guy who sent in the comment a question about GameStop or AMC and saying, well, I'll just buy, once a month, I'll buy 10 grand worth, blah, 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 and in the long run, I'll hit it. I have to say, absolutely not. That is gambling at its finest, right? You're telling me you have no idea what you're doing, because what you're doing is you're praying and hoping that you get lucky and this Wall Street Reddit bets group pumps this thing up one more time for you to bail out of your overly accumulated position. So when we're thinking dollar cost averaging for the long term, hey Terry, good to have you with us. When you're thinking long term, it's about what you are dollar cost averaging into. Let's say, for example, let me see, what's a company I like? I guess we could talk about MJ. I know we've got a few people here who like MJ, the cannabis ETF. So if I look at the cannabis ETF, let's bring up my screen over here, and I'll bring up MJ. I believe in the long term, the cannabis industry is going to do rather well. I don't think it's going to go to 0. Certainly that's a risk of regulation, but I think we're past that point now that it's going to all of a sudden be illegal again. So dollar cost averaging in a situation like this, I would say is okay. The reason being is I'm buying a basket of securities that over time I'm expecting some of those to disappear, but some of those to actually move to the upside and keep on moving up. And I'm okay holding this for years. That's the consideration I have to make, is I have to be okay with a dollar cost averaging situation and holding it. And I did see some question marks earlier. Dollar cost averaging means it's going against you. You bought it at 60 and you say, I love this company, I like this ETF, I like this industry sector, whatever. You bought it at 60. It's now trading at 50 and you're like, man, if you liked it at 60, you're going to love it at 50. So you buy some more at 50. Let's say it keeps falling and you end up buying it at, let's say, 40. over time, if your math is right and your analysis of that security is right and the prospects for that industry are right, then that security may all of a sudden run to 90 over time. And now instead of just owning it from 60 to 90, you've got some at 60, you got some at 50, you got some at 40. That's dollar cost averaging and kind of lowering your cost basis. In an example like the NASDAQ 100, the Dow Jones Industrial Average, MJ, these are securities that have a lot of holdings. I think it's a good strategy, actually, to be using with an ETF or an index because you have that diversification. If you're picking, and yes, Drew, it's averaging down, really. If you are picking a company that you think it's going to do good, that's fine, but you have to be realistic and look at the prospects for it. Somebody in here, Greg mentioned Apple. Sure, we could bring up a chart of Apple here, and here's your Apple chart. Not really liking the chart right now. Still in that kind of pennant formation we've identified, but it is still trending up. And over the long haul, if Apple continues to innovate, then yeah, they'll probably do well over time. I would probably wait for the market to correct a little bit before I started doing a big dollar cost averaging or averaging down type of position. But here's where I think stupidity runs into it. You look at something like GameStop. Okay, so here's GameStop, which is crazy. It's just a ridiculous looking chart. The fact that this thing is $280 is just mind-boggling to me, but it is what it is. The gentleman in particular was talking about dollar cost averaging on AMC and GameStop. I use GameStop because it's an easy example. If you bought GameStop at $280, you have to know what's propping this thing up. Essentially, GameStop, we talked about many times, it's a dead business. It's dead. This is Blockbuster, guys. I mean, we all know that. They're not going to rise from the ashes and all of a sudden become the hottest spot that everybody's got to go to. Can you imagine all of a sudden 2 years down the road, we're all going, dude, man, what are you doing tonight? I'm going to GameStop, man. Yeah, let's go. What's going to happen to make that change? I don't see anything that could make this security have a valuation of $280, which is the highest it's ever been. So if you're going to dollar cost average on this one, which is what the gentleman was talking about, he's saying, look, I could buy some at 280 and it drops at 250, I'll buy some more. It drops at 200, I'll buy some more. And eventually, it's going to have a real big spike to the upside and I'll be rich. And my thinking is, I will take that bet, the opposite of what you're doing, and I'll bet you that you'll go broke. Because over 5 years, that thing's probably going to go all the way down to zero. And not only did you buy it at 280 and 250 and 200 and 180 and 60, you're probably trying to buy it at 25 cents as that thing files chapter 11 or chapter 7 or whichever chapter wants to file. So to me, the objective for dollar cost averaging has to be, I guess, in the right focus. Not hoping you get lucky with this GameStop or let's look at AMC. It's funny, I sold AMC this morning. I've been selling weekly puts. So it's extremely risky, but I've been selling puts on these meme stocks because the premium is so high, and I sell them 20% out of the money and get executed. And it was it's pretty good for just a couple of days. I sold some. I think it was last Wednesday or something. I sold some puts when AMC was around 62, 63, and I sold a $50 put. I was actually exercised Friday, right at the close. I was exercised, and this morning it jumped up. I dumped it out at $57. It was a nice little run there in AMC, but I'm not doing that with big position. It's extremely risky, but the premium that you get on these options is just it's really, really high. So let's just use this dollar cost averaging analogy here. You have to look at this and say, all right, if I buy it at 55, great. Maybe it'll go back up to 70. Maybe it goes to 100, whatever. But if this thing starts to drop, I think everybody here who having worked with you guys for over a year now, I know that all of you are going to go, yeah, it looks a little overextended. It's probably going to come back down to its norm, which should be somewhere around 12 to 15 bucks. And if you dollar cost average on this and bought at 50 and then 55 and then 50, then 40, 30, 20, what will happen here, because when you have an account at a brokerage firm, it's naturally a margin account unless you specify for it to be a cash account, then you are using margin on every trade. It's just the way these brokerage firms do it to make themselves money. So if you have a $50,000 account and you only buy a $25,000 position, depending on the broker, half that $25,000 position will be technically on margin. There's sneaky things some of these guys will do so that they're making some interest on that. Not all of them do that, but some do. A lot of them are getting caught for it, and I don't know if it's illegal for them to do that, but you signed a margin account agreement. Now, if you're dollar cost averaging on margin, and you're leveraged full tilt, basically it only has to drop 50% to wipe you out, and they'll do a margin call and close out your position for you. So very, 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 very dangerous proposition to make. Now, I'll give you guys a personal example, and I think I've mentioned this one before, but let me go over here and show you that this is where it happened. Actually, before I do that, before I get into that, the only situation that I think that you should be dollar cost averaging down on, or dollar cost averaging in on, would be a company that you feel, if it's a single company, you should be looking at those fundamentals. And if the fundamentals look great, the prospects for it look great, like it's, like almost a Larry Jacobson, Warren Buffett type of approach, then okay. You know that the numbers are in your favor, it's just maybe your timing was off. Looking at something like GameStop, which is losing $3 per share, and you're going to tell me you're going to pay $2.80, or looking at something like AMC, which is losing $15 per share, and you're going to tell me you're going to pay $55, and the numbers have been declining for years on both of these companies, that is not the right situation to be dollar cost averaging, other than maybe you just get really, 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 really lucky. All right, let's see. There's a whole bunch of chatter going on here about this. Buying a dip is a form of DCA. Correct. Generally, when you say buying the dip, it usually means that you're out and you're buying that dip. And there was a comment right here. Mario says BTC is a good one for dollar cost average. Again, that's a single entity. It's an extremely speculative instrument. A lot of people feel it's a scam. I mean, you heard former President Trump say that he thought it was a scam and he wants to go with the dollar. You also heard the president of El Salvador over the weekend saying that they are going to be working on a bill to make Bitcoin legal tender in their country. So that's extremely, extremely, extremely risky, doing it with something like Bitcoin. But in my mind, I've done the analysis. I look at the fundamentals. I look at the prospects for that ecosystem of cryptocurrencies and digital assets, and I'm very optimistic. So I have, a good amount of money there. Not all, right? Obviously, that's too much risk to take on with all my capital. But with these types of companies like AMC, GameStop, Nokia, to me, it's just nuts. How the hell is GameStop up $31.65 a day? How? It's easy. You have this belief. It's done one good thing. For those that want to know the truth behind GameStop and AMC, it's done one great thing, in my opinion. And that's it's shed a light it's actually pointed the finger at regulators and said, listen, you guys are letting people do naked shorting. And it's not you and me, right? If you and I go short a stock, we have to tell our broker, we'd like to borrow it from you. And they go, okay, we'll loan it to you. So the broker may be doing something illegal behind the scenes by giving it to you, but brokers aren't doing anything illegal, let's be honest. They're loaning you shares of their clients. The people who are doing illegal things are hedge funds, and they're overly shorting something with capital they don't have. So I like the fact that the exposure to this flaw in the market is being put on center stage, and hopefully we'll get some regulation. It won't impact you and me. It will impact hedge funds in the way that they're reporting shorting on the back end and basically creating shares out of thin air. I mean, how do you get over 100% of all GameStop shares were short? That means, let's say that I'm making the number up, but let's say there's 100 million. That means that at one point there was 140 million shares short. That shouldn't happen. It should never go over the exact number of total shares. That would be overly leveraged. So the fact that they got short squeezed out is great. And right now what's happening is it spikes. It does a short squeeze, which if you don't know what a short squeeze is, look at some of my past shows. You can type in short squeeze on my channel and you'll probably see the show we specifically address GameStop on. But what happens is that short squeeze triggers a lot of buyers. It blows out a bunch of hedge funds, but all of a sudden those hedge funds get more money and they go and they short at much higher prices. And ultimately, the market wins out and GameStop goes right to where it should be, which is down in the teens on its way to zero over the next few years. But it's just the way you look at price action. So it's great because it's getting a lot of attention, but what it's also doing is it's really destroying people's perceptions about the market. It's making people who have no business about no business understanding how the markets operate think they're geniuses. Again, the guy that was telling me how he's buying long, shorting GameStop, and then it shot up, and he's like, "Oh no, I was long." Clearly, I think this guy's just lying through his teeth. Now all of a sudden he's saying, "Oh, I want to be an investment advisor, and here, sign up for my service." I'm just going, "Oh my God, you have no clue what you're doing. You got lucky on something." And anyway, don't get me going. All right, old parts except me, Tom, and a few others don't like Bitcoin. Hey, it's okay. You don't have to like it. When we look at that ecosystem that I talk about, Bitcoin is one tiny component of it. All that did was just open the door to cryptography, blockchain, and that technology. I think in the near future, again, you're going to have a lot of different markets and businesses and industries open up because of that technology that was started with Bitcoin, but it doesn't have to be all about Bitcoin. Let's see what else do I come up here. Okay, so let me show you this example. This is true. This happened to me, and this is why I'm such a stickler for it. I told you, President Clinton said that Exodus Communications was a national treasure. He said it's important to the well-being of America that we have a security company for the internet. And I was like, yeah, baby, I'm buying on that one. So I bought this one, and here, I'll show it up here. There's a red line creeping on your charts. That's the price of Exodus Communications. And you can see it did pretty well and then completely fell apart until I believe in 2001 it went bankrupt. I bought it at $80 per share, which is right up here near the top. $80 a share I paid for that one. I'm a little bit stupid. Unfortunately, I got caught up on the hook, line, and sinker act and got a little bit wrapped up on the emotions. But hey, when a president says it's the national treasure and a benefit to American way of life, I'm pretty convinced it's going to work. I was much younger that time. I should know better. But I bought it at 80. I bought it at 60. Bought it at 40. And you can see as this thing kept on drifting down, I'm thinking to myself, this is a great company. The president said so. It's going to go up. And ultimately, I rode this thing all the way into bankruptcy. The good news is I didn't do it with a ton of money. Right? It was only 100 shares, so it ended up being an $8,000 loss. But to me, that is the problem with this. If you're dollar cost averaging, you're buying more as it drops. You're thinking it's going to go up over time, but is it? What I forgot to look at and didn't care about at the time because I just didn't care about fundamentals was the fact that Exodus Communications had tens of billions of dollars worth of debt that it could not service. The writing was on the wall early in 1999 that this thing had too much debt it had taken on. Of course, when the bubble crashed, everything fell apart. They couldn't pay their debt and they went almost insolvent. Yeah, so I'm definitely not a fan of dollar cost averaging on an individual security. I'm okay with indexes, but your goal has to be long term. I'd rather do market timing, right, where you're looking at turning points in the market like we have right now. I mean, may as well go into today's market action, but here's what we have for today. Russell 2000 leading the charge. Thank you to GameStop and AMC. I brought Russell up today, but you can see 23.19 is where we closed at today. It's actually not out of the woods yet. I'm going to extend this yellow box over. We've been tracking this yellow box for quite some time. I'll put it there because until we get out of that one, I'm not that interested in any long-term play on the Russell, but it has been boosted by some of these GameStop shares and AMC and meme stocks. Hell, they keep it up. Might see GameStop add to the S&P. Oh, it's Comedy Monday. Number 2 on our list was gold. Now, gold, having that pretty aggressive drop a couple days ago, rallied nicely. 1902 is where it's at. Honestly, I thought it was due for a pullback here, but nice little bounce to the upside. Still got to breach those highs, but I still think we're headed close to that 1950. Just looks like nothing to stop it from getting up there. NASDAQ, since we're talking about indexes, NQ. Right, we are creeping back up towards those highs. What's nice about the NASDAQ is we have cleared these highs we've had for about the last 2 weeks. That's pretty important moving to the upside. I think that's critical in getting us back to 14,000 on the NQ. And I did not exit my my stop on NQ. Still got a little bit to go before I get out of that one. But remember, I've put on the NASDAQ 100. Keep going on the list. S&P 500, which is looking much better. You're teetering on all-time highs yet again. 4,227 is where we're at for that S&P 500. It's not the best-looking candle. Some people call this a hanging man, which, according to Steve Nissen, is technically a reversal trend. But I'll wait for it to break a low, but it's looking real strong right now on that S&P 500. I think the big news is going to happen later on in the week, but I'll tell you about that in just a second. Our 10-year, nothing really noteworthy here from the 10-year other than the fact it's been on an uptrend for the past 2 months. When we say that that's trending up, that means those yields are dropping, which is a great news for anybody looking at real estate. Crude oil had a little bit of a pullback today, which is fine after a great 4-day rally on that breakout above 66.80. Today closing right now at 69.22. And lastly, Bitcoin taking on the chin, down 6.66%, a rather demonic number, I must say, just below that 34,500 mark on the day. And that really is hurting a lot of the cryptos out there. Most of the stuff is down in that space. Okay, so what don't I own? Somebody says I don't own any Channels because he doesn't own any. Let's see. Jerry, what am I talking about? Merlin, today's Trump. Bitcoin is a scam, and the dollar should be the world reserve currency. I do have Bitcoin, Big Ab. I definitely... Oh, you're talking Trump. I was like, I own Bitcoin. What are you talking about? Yeah, you're right. He probably doesn't. He doesn't know what it is. But who knows? Eventually they will go dead broke, so I don't worry about those people who get lucky. I agree with you, FX, but you know what? I don't like to see the retail people lose money. We get too much of a bad rap as being stupid and not knowing what we're doing and being ignorant, and Wall Street's smarter and better and faster and more efficient than us. That pisses me off. So I like to hopefully help, help people get past these obstacles and not get stuck in that mindset that, oh, well, Wall Street's better than us. And if you do things like that, if you're dollar cost averaging on a GameStop or an AMC, you're proving that Wall Street's better than us, because Wall Street's not dollar cost averaging long on GameStop. If anything, these guys are out there shorting the hell out of it. All right, what else do I got here? You should have stuck with Netscape. Yeah, I wish. Netscape was one of my first trades I ever made. After I took my online trading academy class. Oh, man. Yeah, Netscape. That thing was a super high flyer, right? But can't win them all. Actually, the one I should have kept is my Amazon. The Amazon one's the one that kind of bugs me I didn't keep, and I've never been negative about it either. Let's see, what else we got? Okay. Hey, Pepe says, I miss those Trump tweets. They move the markets every week. We have Elon Musk now. We don't need Trump. All right, so Excess Communications, I showed you that one. Let's see, what other questions did I have? All right, if you have questions, feel free to type them on in. That was it. I really wanted to do just a basics on dollar cost averaging. Bottom line is, I'm a huge fan if done properly. When I say done properly, it's going to be one of two ways. Dollar cost averaging in combination with market timing of an index, like the NASDAQ 100, like MJ, like any diversified portfolio, I think is a great idea done properly. Dollar cost averaging of individual securities, I think, gets a bit dangerous because you're putting your faith in that company. Not to say don't do it, just if you are, it should be more of a Warren Buffett approach, which is this a value play for me right now? Is there earnings? Is there good management? Is there a product or a viability for that product going forward? If you look at Larry Jacobson, he talks about his portfolio that we've been tracking for years. Everything in there has been absolutely methodically chosen because of fundamentals and product prospect going forward. Again, if I look at AMC and GameStop and think product prospect going forward, I have to laugh at GameStop. AMC, I think, is going to be okay, but it's not worth the valuation that it's at. I mean, even if, and we can beleaguer that point. So, there you go. That's my thoughts on dollar cost averaging. All right. I have one other question to get to, then I'll go to your wrap up for the day, and then if you guys have some more questions, let me know what they are. This question came in from Jeff. I like Jeff. Jeff, you had a whole bunch of great questions along this line. He says, can you please explain the idea of market cap for cryptos? I recall you getting on a site that shows all cryptos with how many shares they have. They're not shares, they're going to be coins or tokens, so we got to get the nomenclature down, that they have in circulation and in storage. All right. This is where we get entertained. Says, I have a friend that thinks RXP, I think you mean XRP. I think you mean XRP. I'll check out, I don't know if there is a ticker symbol called RXP, but I'll check out XRP, which is Ripple. He says he thinks it's going to $50,000 per share. Is this even possible? Show the details on the math behind this. Oh, I love the fact. Now, Jeff, you got to be mean to your friend. Like, if he's a real close friend, you just got to go, you're an idiot, dude. Really? Ask him what would be the market cap of Ripple if it hit $50,000 per share. Again, I did the same thing with Shiba Coin, right? Where you got these people going, oh, it's going to get to $1. It's going to be $1. It's like, that would give it a $1 quadrillion market cap, which is greater than every monetary item on the face of the planet combined. We're talking GDPs, we're talking printed money, we're talking debt, we're talking collateralized loan obligations, default swaps, real estate. You add up every single item, it's not even $1 quadrillion. Even if you put a price on every human head of like $1 million, you're not going to get there. Anyway, so let me go to a platform where I can bring that up for you, and I'll go here. Let's go to a World Coin Index is a real easy one. There's one called Coin Market Cap as well. World Coin Index is just an easy one, so I'll check that one out for you. So here you have a list of all the different cryptocurrencies. Now, you mentioned XRP. Now, I'm going to highlight this one here. It might be hard for someone to see at home, so let me make this bigger. Here's Ripple, which is XRP. And right now you can see nothing on my screen. The number of coins, that's the second from last column here. It says there's 46, okay, 46.15 billion of these cryptocurrencies, of Ripple coins. That said, here's one thing that you got to research. Even though it shows you here that there's 46 billion Ripples, there's more than that. This is all that's in circulation right now. Ripple has 100 billion, with a B, coins. The issue that I have with Ripple is that the Ripple Foundation, the company, they have 53 billion of them internally. They're keeping more than half of them. So the population can only trade amongst this 46 billion. They actually have another 53 in their pocket. And if they decide to sell all that at once, all of a sudden Ripple will crash. Now, let's do something here. I believe I have a calculator. I'll bring it up on my side screen over here just so we can do the math. And let's just assume that we're going to do it off of what's currently available. That's 46 billion, right? 1, 2, 3, 1, 2, 3, 1, 2, 3. That's hundreds, thousands, millions, billions. That's 46 billion right there, okay? This site, Jerry, it's called World Coin Index. World Coin Index. There's also another one called Coin Market Cap. They're both good. So there's 46 billion, and I'm not even including the 100 million that's on there. We'll just keep it a very simple number. And we times that by $50,000 per Ripple. That means, let's see, here's, oh boy, this is, let me get the numbers right. Hundreds, thousands, millions, billions, trillions. That's 2.3 quadrillion. 2.3 quadrillion. So this would be double, over double what Shiba Coin would get. To think, to have the idea that something like Ripple would get to $50,000 a coin, it reeks of lack of education. It tells me this person has no idea how markets work. And this is the problem we see every single day, guys. I'm sure you guys see it in your worlds too, when you're looking at social media and Twitter. These guys going, oh, well, such and such is going to get to, it's going to moon. It's going to go to $500 this, a share, a coin, a token. Do yourself a favor. Just go out and look at how many shares are available and then the price. And that gives you your market capitalization. There's no way that an asset in my lifetime will get to $2.3 quadrillion market cap. Even with the most unbelievable inflation, Zimbabwe type inflation, I don't think you would get to these types of numbers. So there's no way. Now, remember, I actually truncated that. So if you want to look at the whole truth, that would say that Ripple could get to 5 quadrillion. Remember, there's 100 billion of them. 100 billion, and there's only 46 billion in circulation. The other 53 are sitting at the company and could anytime come to market. So this number would be much, 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 much higher. So, you know, you look at 46 billion. If Ripple got to $1, which it is at, that gives it a market cap of, you know, roughly, actually it's at, yeah, just under $1. It's right around $40 billion market cap. Right? You can see that over here on this screen. And, you know, is that too much? Is that too little? At least this is a reasonable number. It seems high to me, given the fact that they're not fully implemented in the banking system and structure, but that's anticipatory. A lot of people hoping that they're going to get there soon. And, you know, Ripple at one point was over $3 per coin. I'm a little bit bummed I didn't take my money off the table, but I also wasn't looking at these little details about that specific security. You look up higher up, you've got things like Ethereum, which is making a big charge at Bitcoin's dominance, that's for sure. There's only 116 million of them out there. Now, that number is growing every day, but not at like an alarming rate. You know, it's still moving up. It'll continue to grow, but slowly. Whereas Bitcoin, that number will stop forever at 21 million, which is this second line item here. So every one of these has different rules, different protocols. Like what, I'll click on this. And here's Shiba Inu. It says there's 394 trillion. There's actually 1 quadrillion, but they say Vitalik burned 500 trillion of them is what is being said. So we'll see. But this one is not going to get to a penny. There's just no way. Even if it got, a dollar. Even if it got to $1, that'd be a $394 trillion market cap. That means it's going to be worth, 1,500 apples. Nah, I'm pretty sure that's not going to happen. Even if Trump tweets XRP is going to the moon, Trump could tweet this thing he could tweet out that this is something that everybody on Earth should own. It still is not going to get that high in value. No way. Absolutely not. Let's see. I'll show you another site that I think is actually a good one for that. It's called CoinMarketCap. It's some people like this interface a little bit better. The reason I like this one better is you can break it apart and look for different cryptocurrencies or different tokens simply by running filters. So, for example, you see here there's all the main big players. But let's say you didn't want to do anything with tokens and you just wanted something that was, well, let's see. Let's go category. And you should be able to switch. But there's all kinds of different categories you can go through here. Boy, there's so much. How about decentralized exchanges? So we talk about that ecosystem. These are all decentralized exchange tokens or coins, depending on which one. But most of them are going to be a token. Now, let me go back here a little bit because you were talking about Proton. So the XPR, remember we had a comment earlier about XRP. Now, there's RXP. So let me see if RXP is even something, because I don't know what RXP is. If it is RXP, I'm assuming, yeah, there is no RXP. Okay, so you probably just meant XRP and got that one backwards. Perfect. Let's see. Any thoughts on Bezos going up in his Blue Origin rocket next month? Wow. No, but I will tell you what I'm doing. I'll tell you how I'm playing that. I'm buying puts on Amazon. It'll be the first time I'm betting against Amazon. Why? If let's say you don't do anything, right? And he flies up into space, everything goes perfectly as planned, and he comes back down, it's all great. Is Amazon going to soar? Probably not. If he goes up and there is an issue, personally, I wouldn't go. If you told me, Merlin, you can have a free trip up into space right now, I'd be like, I'm going to wait. I want to wait a few years until I get, all the different regulatory agencies to check out all this stuff and make sure this thing is safe. I'm sure it's going to be safe, but a little too early for me on technology that is still being developed. So I'm a little bit nervous about that. So if something does happen, and heaven forbid, knock on wood, I don't want anything to happen, but what if it does? I'm not trying to capitalize on a bad event. I don't want the event to happen badly. I want it to be great because it'd be great for mankind. However, there is definitely a fighting chance that something happens to that thing. And what if it crashes? What if that thing crashes and everybody on it perishes? What's going to happen to Amazon? It's going to take a big hit. Even though he's not even the CEO, it'll take a big hit. So to me, I know it's horrible to say that, Tom, right? You're like, I don't want anything to happen. I really don't. But it's a bet. It's a bet. It's like the fight. We saw the Floyd Mayweather Logan Paul fight over the weekend, which is what a joke that was. But they were betting on who gets a bloody lip first, who bleeds from the eye first. It was all ridiculous, all the bets out there. I think that tech company rockets have about 3% failure rate. I'll take that 3% chance because I'm pretty sure that if that rocket, it was not going to cost me a lot of money, but if that rocket drops and fall from the sky, I think Amazon, you could see a pretty significant drop in a very short period of time. So I'll be buying some puts before that. I'll do it on the show, let you know. Yeah, Katie. Katie knows me and airplanes don't do really well on a spaceship. I watched a video of the pilots. So when they one of the test pilot things they did here. Oh no, when they were going to the International Space Station, and those guys were calm as a cucumber. I would have been freaking out. Let me out of here! I gotta get out. There's no way. You got some Xanax? You'd have to give me like a morphine drip to get on that damn plane. All right. Merlin, is there a way to buy XRP on Coinbase Pro? Right now, Jerry, there's no way to buy Coinbase in the United States. In the United States, you can't. Well, I guess you could technically, but it could be very dangerous for whoever sells it to you. And the reason is the lawsuit right now that's going on behalf of the SEC against Ripple is arguing that they are a security. And because they're a security, anybody who's selling them needs to have regulatory approval. So they'd be technically selling something that was illegal for them to sell, which is why almost all exchanges in the U.S. said, we're not touching it. You can keep your Ripple at Coinbase. You just can't trade it. You can move it somewhere else, but you can't buy or sell it. It's available on Uphold. Is that, my guess, Jose, is that's probably a foreign broker because most of these guys really covered their butts by getting out of the U.S. You can buy it on Binance, you can buy it on other exchanges, but just the U.S. ones pretty much locked down because of that. They got a little worried. It'll be back up soon, but no, I'm not overly worried about it. Remember, if you got a $1 price point and you got 100 billion tokens out there, and 53 of those are in your possession, that means you have $53 billion. I'm going to take whoever's fighting the SEC with a $53 billion budget to fight them. I'll take them as winning. Look, OJ got off. He didn't have $53 billion. Let's see. Marcus says, about his company, Blue Horizon, of the three in the market, his SpaceX, Virgin X, which would you say are the most attractive for the future space tourism and mining industry? I would probably say at this point, given my minimal understanding, I understand him. I think that SpaceX probably has the big head start. I think that I think it's SpaceX, Blue Origin, and then Virgin. Virgin, I think, is not really concerned with any of the other stuff other than just tourism, right? Getting up there and flying around in space. But SpaceX would be my number one. Yeah. How do you calculate a reasonable market cap for crypto? I would use something like Bitcoin as my benchmark, right? Bitcoin being the lead dog right now with market cap. Let me just bring the screen up here for you. Get some of this off here. Bitcoin right now, let's go back to CoinMarketCap. You're looking at a market capitalization of $640 billion. Of course, it was well over $1 trillion here just a little while ago, but still, that's your leader. That's the big dog that everyone's trying to overtake. Now, remember, there's breakdowns of crypto. You have three different categories, in my opinion. You have peer-to-peer payment, which Bitcoin is, that's all it does, really. You have programmable blockchains like Ethereum, which that was the first one to come out. I call that Gen 2. And then you have Gen 3, which is programmable blockchains with scalability. And that's going to be things like Polkadot, Neo, Cardano, those types of projects. And they're gaining very quickly on Ethereum. Many people feeling that Polkadot and Cardano are Ethereum killers, which it could be the case. But if you're looking at a cryptocurrency project and someone's telling you, oh, it's going to have a $5 trillion market cap, just think, look, Apple doesn't even have a $5 trillion market cap, and it's everywhere on Earth. Okay. Always keep that in there. At least I'll stick to scuba diving. I used to love scuba diving. Definitely was one of my favorite things to do until I started having claustrophobia and anxiety. Let's see. Yeah. I don't know all the details, so I got. Let's see. Fernando wants to know about Theta Coin. I can just speak to the fundamentals of that one right now. I don't know much about that protocol or project. I mean, there's so many different ones out there. There's over 10,000. Right now, 10,315 different cryptocurrency projects. That includes coins and tokens. As far as market cap goes, I mean, this thing was nothing a year ago. Well, it really was almost nothing, a couple cents. And now all of a sudden, you find this thing up around $9. Market cap-wise, you're looking at a market capitalization of, where is it? Oh, that's volume to market cap. Huh, why is it not showing me? There you go. $8 billion, almost $9 billion. I mean, obviously, when you have $9 billion, you can do a lot with it. But maybe, Fernando, down the road, I'll do a special just on specific tokens and specific projects. But today, we don't have time for it. All right, I got to go. That was it. I didn't want to do a whole big old show today and end up doing one. Here is what I have cooking for mañana. On the economic front, by the way, for anybody who's trading Japanese yen, you do have GDP coming out for Japan here in about 2 hours. So I would keep your eye on that one. That could be interesting with regards to moves in the Japanese yen. There have been, I guess, over the past couple days, some pretty aggressive sell-offs in USD JPY, but it's still in a nice uptrend overall for the dollar. So weakness in the yen. We'll see how that GDP number comes out. For tomorrow, this is what we've got cooking. Really, for the euro is some important stuff. You've got the ZEW Economic Sentiment Report. Most people following the German one, which comes out at the same time. 2 a.m. is when that announcement gets released. They also have GDP. Moving down the pipeline, we've got the NFIB Small Business Index for the U.S., also trade balance numbers, and that does it for the U.S. markets. And pretty much everything else is rather boring. There is a German trade balance number coming out late tomorrow night, but that's pretty much it. Earnings-wise, nothing really exciting with earnings today. The big one will be coming out on Wednesday, and that'll be a fun one. GameStop's going to be reporting earnings, which that'll always be an exciting one to watch as the meme stock guys have a field day with that. All right, that's going to do it for me for today. Thank you, guys. If you want to know more on a specific topic covered for tomorrow, since I don't have any guests scheduled, I get tired of calling guests all the time and asking them to come on the show, so I've been doing a lot by myself lately. So if you have this topic you want me to go over, let me know what it is. Send it on in at TraderMerlin@gmail.com. Send your questions there, comments, feedback, whatever you guys want, and hopefully I'll get to it on tomorrow's show or sometime this week. Thank you, everybody. See you tomorrow.